Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have JP Theriot. He's the CEO of Uphold, and we're going to look at trading anything to anything, why cryptocurrency should be converted to the US dollar instantly. It's great to have you with us, JP. And we think the future of money, trading anything to anything, the technology exists. Why is it not happening yet?
Thanks for having me. Well, I think what's underway, or what crypto's enabled, is a lot like what the internet enabled for media. So it's the digitization of all forms of value, and I think it's going to take 5-10 years for it to translate into anything to anything, meaning truly anything, venture capital, real estate, that nature of thing. What we're referring to is any crypto to any crypto, crypto to lots of fiat currencies and commodities, and we cover today close to 60. We're planning on adding securities, but eventually it should all be digitized, fractionalized, available on mobile devices.
Yeah, I mean, if you think about it, at the end of the day, particularly when it comes to the crypto market, you could do that person to person just on an exchange. You don't need all those intermediaries. One of the questions that come up when you talk about mass adoption is getting to know your customer.
Yeah.
When you talk about cryptocurrency, that's always a challenge. How can that be alleviated with the technology that's available today when it comes to KYC?
Sure. So compared to walking into a bank and filling out a lot of papers before $1, I think using a mobile interface, you can capture biometrics. You can ask all the same questions that a bank would ask, but you could also make it commensurate to the dollar volume at hand. So if somebody's going to trade $5, they don't need to do the nature of KYC, AML, et cetera, screening that they would if they reach certain thresholds.
Right, but even with KYC, let's talk about the technology that underlies with the platform.
Sure.
Blockchain is a technology that a lot of people are familiar with, and when you think about money laundering or some of the nefarious activities that take place, whether it's fiat or cryptocurrency, with this kind of technology that's available, KYC should be even better than it exists now, because it's a supply chain. You could get it from the issuer, me, to you, the customer.
Right. No, absolutely. And I think like the internet, Bitcoin and crypto sort of had a criminal beginning to the extent that high-risk new platforms invite high-risk participants. And so I think the early days of Silk Road and what have you have now matured to where regulators are aware of the fact that something that leaves a digital vapor trail is better than banknotes in a duffel bag on a private airplane. There's a lot more traceability.
Yeah, I mean, you could make the same argument with the internet too when it was first established.
Exactly.
Now look at it, we can't do our jobs, we can't live without it. Let's talk about the platform itself, Uphold, and the efficiency of crypto trading. Tell us more about that.
Sure. So the vernacular in most crypto exchanges is trading pairs. So the most common one would be Bitcoin to ETH and so forth. But if you wanted to go from, I don't know, Kenyan shillings into XRP, that's a multiple hop transaction that's not very cost efficient. We've got a very sophisticated reserve management system, trading engine, et cetera, that allows implied pricing from anything to anything. So if somebody wanted to go from, I don't know, Brazilian real into Dash, we enable that. Nowhere else does.
All right, and you have over 1 million customers from multiple countries, so clearly this theme is catching on.
Yeah, absolutely. No, yeah.
All right, and do you expect that growth to continue? I think digital asset growth is going to continue.
Absolutely, because you end up being able to democratize any asset. So today, venture capital, private equity, real estate, even stocks on Nasdaq, a share of Google, a share of Berkshire Hathaway is way out of the reach of most people around the world. So if you're able to fractionalize that, again, make it digital, make it accessible to a Brazilian millennial, the interest in a Tesla, in an Apple, in a Google, not just because of the cool technology, but as a road to wealth creation, is universally interesting, and it's been restricted to things that haven't been digital or Internet of Money like.
All right, now to wrap up here, clearly we've bought into the story here in the technology. What are some of the risks that could be associated with this?
I think there's regulatory risk. I think the burden we all face is that of hackers and people's personal information being out there in a way that can be taken advantage of. I think there's some great advancements in creating forms of, say, digital identity where the PII is consolidated into one place and you can use zero-knowledge proofs. I just need to know you're of a certain age and you have a certain bank balance, and I can create access to certain investments without necessarily needing to know the details. So,
Well, good growth if you're in the reg tech space for sure.
Absolutely.
All right, JP, thanks so much for joining us at MarketSite.
Thanks
And thank
for
you for
having me.
joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.